Welcome to the Deep Dive, where we cut through the noise and get straight to the insights. Today, we're plunging into, well, one of the most fascinating challenges for Gen Z. How do you navigate this financial landscape? It's evolving so fast. It's almost like a crypto judo match, On one side, you've got the established players, always innovating. On the other, this new decentralized wave, challenging everything we thought we knew about money. And both are really fighting for the attention and the assets of a generation that's just starting to work, live, and plan for their future. Our mission today is to unpack two fundamentally unique approaches to financial management for you, our listener. One is rooted firmly in traditional fintech, things that can be your comprehensive integrated financial hub. The other, it's all about decentralized crypto, putting direct control, that self-sovereignty, right into your hands. We're going to explore how these two philosophies are battling it out for market share, really shaping how Gen Z manages their money today and tomorrow.
That's right. And to really bring this crypto judo match to life, we're diving into two specific examples. First, SoFi. It's a well-known integrated online financial platform. And second, Spark, which is a significant player in the decentralized finance or DeFi space. And we'll explore these using two personas. Think of Anya, who maybe values those integrated traditional solutions, wants everything neat in one place. And then there's Ben. He's drawn more to that crypto frontier, seeks direct, cutting-edge control over his assets. Let's see how their paths might diverge or maybe even converge in this evolving financial future.
Okay, let's unpack SoFi first then. This platform really aims to be an all-in-one stop for users, simplifying what, let's be honest, can often feel like a dizzying array of financial decisions. You talk about helping you get your money right. So for someone like Anya, maybe she's just graduating, starting her first job, looking to move out. What does getting your money right actually mean in the SoFi universe? What's their core promise?
Right. So SoFi's whole mission really revolves around helping people like Anya achieve financial independence. The idea is so they can realize their ambitions, whatever those might be, buying a home, traveling, just feeling secure. And they frame it around four key principles, kind of designed to simplify things. First, it's about attacking debt strategically, with a clear plan. Especially student loans, which often weigh heavily on Gen Z.
Yeah, absolutely.
Second, building a solid financial safety net, so unexpected expenses don't completely derail things. Third, putting your money to work for you. Smart investing. And finally, diligently saving for short-term goals like a vacation and long-term stuff like retirement. It's a very comprehensive, holistic approach designed to pull all those different financial pieces into one easy-to-manage system.
That sounds incredibly thorough, almost like a full financial ecosystem designed to grow with Anya as she, progresses through life and work. So for a Gen Z individual just starting out, what are the specific services that would immediately jump out, the essentials for managing her work, life, and future planning?
Yeah, for Anya, SoFi offers a really vast range of products. Could be incredibly useful throughout her financial journey. Let's look at lending first. They cover the whole spectrum.
Oh, yeah.
Student loan refinancing, which can be huge for managing post-grad debt.
Huge.
Right? And private student loans for those still studying. Then, if she's planning a major life event, like maybe consolidating high-interest credit card debt, funding some home improvement, even paying for a wedding, SoFi offers personal loans for that. And then, when she's ready for that big step, they've got mortgage loans, buying, refinancing, plus options for auto loan refinancing.
Okay.
One important thing to keep in mind, though, if she refinances federal student loans with a private lender like SoFi, she would give up those federal benefits. Things like public service loan forgiveness. That's a key trade-off.
Right. That's a crucial detail. So they cover the major borrowing needs. What about her everyday money management? And just as important, starting to build wealth for the long term.
Exactly. For day-to-day finances, SoFi offers integrated checking and high-yield savings accounts. And these are FDIC insured, which means her deposits are protected up to the limit. That's a big comfort factor.
Definitely.
And with direct deposit, members typically earn a pretty competitive APY on their savings. SoFi often has these limited time boosts for new members too, making it attractive to move her main banking there. Generally, no account fees, which makes it very user-friendly. When it comes to investing, Anya has options. She can go hands-on with self-directed investing, or if she prefers a more automated guided experience, use their robo-investing service. They support retirement accounts like IRAs, allow trading in stocks, ETFs. They even offer fractional shares so she can invest in pricey companies with smaller amounts.
Well, that's useful.
Yeah, and beyond these, they provide various credit card options, even offer insurance, auto, life, homeowners, renters. And to tie it all together, SoFi provides financial insights, like credit score monitoring, budgeting tools, spending tracking, summaries of her investments and debt. It really is designed to be that one-stop shop.
Okay, here's where it gets really interesting for Anya, I think. The SoFi Plus premium membership and other member benefits. We're talking beyond just the basic products now. What do these offer? Especially for someone like Anya, who's really looking to optimize her financial growth, get expert guidance, and leverage every advantage.
Right, SoFi Plus. It launched early 2025, and they market it as America's most rewarding financial membership.
Yeah.
And, well, maybe for a reason. It really piles on the perks for members who are actively using the platform. For instance, Plus members usually get the best APY on savings. They also get a significant boost on cash back rewards for SoFi credit card purchases, and a match on recurring SoFi Invest deposits, which is fantastic if you're a consistent saver.
Oh, wow.
Plus, members also often get preferred access to IPOs. Can be exciting. And here's a huge benefit for Anya trying to get her money right. Unlimited sessions with credentialed financial planners. Unlimited. That's professional guidance without the typical high cost. Helps her make informed decisions about debt, savings, investments. Beyond that, there are exclusive discounts. Things like estate planning, potentially saving hundreds on trusts. They also offer home mortgage discounts, interest rate reductions on personal loans, student loan refi if she sets up direct deposit or pays the subscription fee.
Okay, so real monetary benefits there.
Definitely. And for that travel, Anya might be planning. SoFi Travel offers premium deals on flights, hotels, rental cars, even earns cash back on hotel bookings made through their portal with a SoFi credit card. Finally, community and engagement. Access to the SoFi Member Lounge, expedited entry at SoFi Stadium, member events, an exclusive online community. Even chances to join a member advisory board to give direct feedback. It's really about cultivating this sticky, rewarding ecosystem.
So for Anya, who might be juggling student debt, looking to build credit, save for travel, maybe a home, SoFi offers this centralized FDIC-insured approach. Loads of perks, expert guidance. It's truly designed as an all-in-one hub that grows with her. You mentioned, over $73 billion in funded loans? 10.9 million members. That's substantial.
It is.
It's a very compelling proposition for a generation that, values convenience, clarity, and having comprehensive solutions all under one digital roof. Now let's pivot. Let's talk about Spark. This operates in a completely different financial universe. Decentralized finance. Our other persona, Ben. He's naturally more interested in crypto. Fascinated by the idea of having direct, self-sovereign control over his assets. He might already be active in the space. How does Spark fit into that world? And why would he choose this path over a traditional fintech like SoFi?
Right. Spark was created to solve some, let's say, persistent issues in DeFi, specifically fragmented liquidity and unstable yields that kind of plagued earlier platforms. Its mission isn't just to be another DeFi app. It aims to be a core liquidity and yield infrastructure layer for on-chain finance. And what's fascinating here, and really the core difference, is it operates using non-custodial and permissionless smart contracts.
Okay, break that down. Non-custodial.
Non-custodial means Spark never takes possession of your funds. Unlike a bank or even a centralized crypto exchange, Spark doesn't hold your money. You, the user, always retain control of your private keys and your assets.
Got it. And permissionless.
Permissionless means anyone can use it. There's no application process, no gatekeepers. Users like Ben connect their own crypto wallets, think MetaMask, things like that, and interact directly with these smart contracts on supported blockchains like Ethereum or Gnosis chain. It really embodies that ethos of not your keys, not your crypto. It puts the power squarely in Ben's hands, and that's a huge draw for that self-sovereignty mindset.
That's a massive philosophical difference right there. Ultimate control, but also ultimate responsibility, right?
Exactly.
So for someone like Ben who's looking for crypto-native solutions, wants to be deep in DeFi, what are the key products or features Spark offers? How can he put his crypto to work here?
Spark has three main product categories that would likely appeal to Ben immediately. First, and often the entry point, is savings. This is their primary landing page. Here, users can deposit stablecoins like USDS, USDC, DAI into what they call savings vaults to earn yield.
And stablecoins, just quickly, are crypto pegged to dollars, basically.
Generally, yes. designed to hold a stable value, usually one-to-one with a fiat currency like the US dollar. So you get crypto benefits without the wild price swings of, say, Bitcoin. When Ben deposits, he receives savings tokens SUSDC for USDC, for example. These represent his share, and they actually increase in value over time as savings accrue. It's worth noting depositing USDC is often very efficient, sometimes without fees, because it uses an optimized pathway. Other stablecoins might involve small fees or slippage. Second, there's Sparkland. This is a decentralized, non-custodial liquidity market protocol.
Okay, a lending market.
Exactly. Earn passive income, or he can be a borrower, taking out over-collateralized loans using his crypto as collateral.
Over-collateralized meaning he puts up more crypto than he borrows.
Precisely. That secures the loan in a volatile market. Sparkland also has some advanced features. Things like efficiency mode or E-mode for higher borrowing power on similar assets, isolation mode for listing newer, maybe riskier assets, siloed borrowing too. These might sound technical, but for Ben, they mean more flexibility and efficiency in leveraging his crypto. And finally, there's the Spark liquidity layer, which lets users provide liquidity directly into other DeFi markets, kind of deepening Spark's role in the whole ecosystem.
Okay, so savings, lending, liquidity provision. Beyond just the products, how does Spark handle governance and community? I imagine for Ben, being part of that community, maybe having a say in the protocol's direction, is a huge draw, perhaps even more so than with traditional finance. What's this SPK token about?
Indeed, that sense of ownership, direct participation, it's central to the DeFi ethos. Spark embraces this through its SPK token. SPK is Spark's native governance and staking token. It was initially airdropped to early users. And it's critical to remember scams are rampant. The only official place to claim it is app.spark.fisp.airdrop. Be very careful.
For a warning.
10 billion SPK tokens were created initially. A big chunk, 65%, is allocated to what they call sky farming for users over 10 years, 23% to the Spark ecosystem itself, 12% to the team. Now, SPK holders can stake their tokens. These stake tokens will be used to validate and secure products, and in return, stakers earn Spark points. This really creates a strong sense of ownership and participation for users like Ben. They get a voice, a stake in its success. It's community-driven finance, really.
It sounds like a powerful tool for those really embedded in crypto. Offers yield, offers a direct voice. But given the nature of DeFi, the fact that Ben is essentially his own bank, what are the critical considerations, the major warnings for someone like him stepping into this, well, frontier financial world?
This is absolutely crucial. Spark itself heavily emphasizes security warnings because of the inherent risks and that self-custody nature. It really is the Wild West compared to traditional banking.
Yeah.
Users are strongly advised only use the official domain, https://spark.fi. Be extremely wary of similar-looking domains, clickable links from social media. They could lead to malicious sites. They also warn against individuals claiming to be Spark contributors reaching out directly. Always verify through official channels. And crucially, Spark explicitly states, do not trust any Spark mobile apps or websites asking for your seed passphrase.
That's the master key, right?
That's your master key. Never ever share it. They also clarify Spark does not advertise on social media or search engines. That's a key way to spot potential scams. It all just underscores the immense personal responsibility needed in DeFi.
If you lose your keys, make a mistake.
Yeah.
Your crypto is gone. There's no bank to call.
Okay, so we have SoFi, the integrated fintech giant,
Right.
and Spark, the lean, decentralized crypto protocol, both vying for Gen Z's financial attention, but from completely different angles. What's fascinating is how both aim to help you get your money right, grow your wealth, but just nearbled, with vastly different philosophies. It's that crypto judo match for market share. Exactly, and if we connect it back to the bigger picture, both platforms ultimately aim to empower users financially. SoFi offers high-yield savings in traditional fiat currency. Spark offers earning savings on stablecoins. Both have a lending-borrowing component, but as we've discussed, the underlying mechanisms, the asset classes involved, fundamentally different. Both are designed to help you, the listener, make your money work harder, just through completely different paradigms of control, convenience, and risk.
So for our Gen Z listener trying to figure out which path or maybe what combination is right for them as they work, live, plan for the future, what are the key distinctions they should really consider? What's the core trade-off here?
That's the key question, isn't it? And the distinctions are pretty stark. First, custody versus non-custody. SoFi. Nationally chartered bank, FDIC insured deposits up to $250K. Government protection, familiar safety net. The bank holds your money. Spark. Completely non-custodial. You interact directly with smart contracts. You always control your private keys and assets, ultimate self-sovereignty, you truly own your money. But also, ultimate responsibility. Lose your keys, no backup.
Big difference.
Huge. Second, asset class. SoFi, traditional finance, fiat currencies, stocks, ETFs, Spark, purely crypto ecosystem, stablecoins, other crypto assets. Then, scope of services. SoFi, sprawling suite, covers almost everything. Loans for homes, weddings, insurance, financial planning, career services, built to be your financial home base.
The whole 9 yards.
Pretty much. Spark, much more focused. Savings, lending, liquidity, specifically within DeFi. And finally, regulatory environment and risk. SoFi operates under strict traditional banking regulations, familiar protections, established processes, legal framework, recourse if things go wrong. Spark operates in the less regulated, more experimental DeFi space. That comes with inherent risks.
Yeah.
Smart contract bugs, market volatility even for stablecoins sometimes, and that crucial need for user vigilance against scams.
Yeah, the user has to be much more proactive.
Yeah, absolutely. And the community protocol.
It really highlights how different getting your money right can look. Depends on your comfort with tech, your risk appetite, your whole financial philosophy. For Anya, that integrated convenience, traditional protection of SoFi, clearly appealing, makes her financial life easier as she builds her career. While for Ben, the direct control, the cutting-edge crypto opportunities, the self-sovereignty of Spark, that's paramount as he seeks to build wealth on his own terms. So we've deep dived into two very different contenders in the Gen Z financial market. On one side, SoFi, comprehensive, integrated, traditionally regulated ecosystem, built for those value and convenience, professional guidance, a broad fleet of services under one roof, helping them manage every aspect of their financial lives as they work and plan. On the other, Spark, a decentralized protocol, empowering users with non-custodial control over stablecoins and crypto, appealing to those prioritizing autonomy, direct yield, and engagement in the cutting edge of finance.
And for you, the listener, whether you identify more with Anya's need for that all-in-one traditional approach to manage her career and life goals, or Ben's desire for decentralized control and crypto-native yields as he builds wealth on the blockchain, understanding these different financial philosophies is really key. Both present unique opportunities and unique considerations as you navigate your financial journey and plan for your future. The choice isn't just about the products you use, is it? It's about what kind of relationship you want to have with your money.
Exactly. So what does this all mean for you? As Gen Z continues to shape the future of finance, the choice isn't just about products, but about the kind of financial relationship you want. With your money, with the institutions or protocols that facilitate it, will you choose the integrated convenience and familiar protections of a traditional fintech hub, or the cutting-edge, self-sovereign world of decentralized finance? The crypto judo match for Gen Z's financial future isn't over, and your choices are an active, fascinating part of its unfolding story.